my channel. I know it's been a while since I did a video, but I'm trying to get back into it. A lot of stuff has happened in my life, but again, you guys don't care. You guys came here for this banging content. So let's go ahead and get started. So we're gonna go ahead and go over two videos today, and then we're gonna see I declined a millionaire for a credit card. So let's find out and see why I declined them. So let's go ahead and hop right into it. We're gonna go ahead and start with the video here first. Okay, this one. All right, let's see here.
90% of
Nope, ain't nobody got time for that. Let's let him play. Let's let him play. But anyway, yes. So in this video, they're gonna go ahead and go over Advantage score and why it's better. Well, listen to it and see, and I'll tell you some feedback what we can take away from this. All right, here we go.
score is Vantage Score 3.
All
Silvio,
right.
thank you so much for joining us.
Thank you.
The health
Thank
of the
you.
consumer is such a concern. Everyone is facing inflation, rising interest rates. The impact of that on their wallet seems to be pretty severe, but we're still spending. The American consumer seems to still be spending.
Very much so. That's counterintuitive because if you look at the overall economy, people are concerned, but the reality is the consumer is actually quite healthy. We measure consumer health by the average Vantage score, and through the end of September, the average Vantage score was 701. So low score is Vantage score 350. The perfect score is Vantage score 850. So at 701, the average consumer is actually quite healthy. The other piece of good news is if you look at the consumer's overall credit utilization, so the percentage that a consumer typically uses of their credit, so 50% credit utilization would be a consumer using about half of their available credit. 100%, you're maxed out. Well, the average consumer at the end of September was at 52.3% utilization.
Well, let's give it up to you guys, the ones that helped us to get to 701 credit score through Vantage Score. Again, this one isn't really important too much with the Vantage Score. It is good, but when it comes to getting approved for a loan, you have to understand this type of credit score is not valid. There's no lenders, and you'll see it today. I'll point it out in the video along where there's no TransUnion that gets pulled as a credit. But let's go ahead and hop into it. Let's listen to this hot garbage, I guess.
And if you look at that number a year ago, it was 52.7%. So the consumer is not maxed out. They're actually reducing their overall credit and managing credit pretty well. So that's the good news here. The consumer is healthy.
When we're looking at the delinquency rate for the average American, where are we seeing the most of the problems?
Well, so the bad news is that it's actually across all credit products, auto loans, personal loans, mortgages, credit cards. Across all of those credit products, we are seeing a slight uptick in delinquencies, and that's been the case since May. Now, there are some that are worse than others, and I would point out auto loans have been much more challenging than the other categories.
What are the key things that are going into this score that people should know?
Well, the reason why the auto loans are actually on the rise is because of bad underwriting. So essentially, this rises from the economy, been failing. It's been failing for months, and when you essentially don't mitigate risk when you're approving somebody for such like an auto loan of what he's talking about, this is what you get. At the same time, I can't even blame the employee because the employees are just pretty much told. Remember when everyone was buying houses, buying cars during the pandemic, they lightened up on credit, on people getting approved. I think it's more because it's like if this credit union or bank or financial institution didn't do it, they had their competition that was going to go ahead and approve it. But the bad thing that happens when you do something like that is that then it's like you're then approving low quality type of loans and you run into this situation where there's a lot of borrowers going delinquent, and in this they just got too loose. And with me, I would have stood firm or at least have a better balance because, you know, this is really bad. This affects them. It can affect their job because if there are too many delinquencies, banks and credit unions can go under, as you saw a couple of banks last year that went under. So this is definitely due to just the underwriting guidelines and allowing people to borrow more than what they can, or maybe giving people chances, which again, I don't think it's bad giving anybody chance to to get a loan, but at the same time, underwriters, you have to mitigate the risk. So it's like, okay, they don't have the strongest credit score. Do they have a low debt to income? Are they putting a really big down payment to mitigate the risk and bring that loan to value down? Because a lot of the cars were being passed, they were financing more than what it was worth. So if you have a car that's 20,000, you're giving 30,000, well, it's only worth 20. Why would you want to give $10,000 over? I would have made the borrower go ahead and come in and bring it at least more down. But again, like I said, they were probably dealing with, if this bank didn't approve it, their competitor was going to approve it, and that's part of the whole thing that just happened from here. But enough of that small rant. Let's get back into this.
No, that can improve their score. We know you need to pay your bills on time, of course, but there are other parts of the score that people may not realize.
Well, absolutely. And this is one of the areas that's really exciting because it's changing and innovating. But most of the data that is used for your credit score is data pulled from your credit report. Vantage Score is one of the two national credit scoring companies, but we're actually an independently managed companies, but our owners are the three credit bureaus, TransUnion, Experian, and Equifax. And so we have unprecedented access to those credit reports, and we use them in innovative ways to really predict who's going to pay and who's not. We've been an innovator in that regard. One of the areas which has been very important to include is rental data. If you ask the average American, if I pay my rent on time for 10, 20 years, is that going to boost my credit score? Most consumers would say yes. But it wasn't until VantageScore innovated in that area, we were the very first credit score to include rental data. So it's an exciting time, and we're developing new technology to enable everyone who's truly creditworthy to have access to a great credit score.
That's great.
Here we go with the bull.
Bullshit? A bullshit?
But that's ridiculous. So she asked them, what are the other ways that you can help boost your credit score? This guy didn't even go over the credit algorithm that's already out there for you guys. Let me actually go ahead and just pull that up here, because he literally did nothing to go ahead and explain how you can improve your credit. But again, there's no point of focusing on Vantage when banks, credit unions, and other financial institutions like Capital One do not use this to approve you for a loan. So it's like a waste of time. But let me at least give you guys some information so we can be able to. So right here, so payment history for Vantage credit score accounts for 40%. So your payment history is a lot stronger than when it is through Experian using FICO. The next one is your credit utilization, which is 20. Your age and type of credit. They went in and combined this and put it together as one, and that counts for 21%. Balances, which I assume this is your credit card balances and maybe also your loan balances in general. So if you have an auto loan, maybe that accounts for it. If you have a personal loan, maybe that accounts for it also. Recent credit, so obviously your credit inquiries that you have applied for, and then 3% is for available credit. So this tells me available credit. I'm wondering if that's more within your credit cards and home equity lines of credit and personal lines of credit. How much do you have available? Counts for 3% of your credit score. But I'm going to make another video going into this a little bit more detailed. But I just wanted you to at least know where the credit score algorithm. He didn't mention anything of this, and I'm just like, bro, this is your job. She asked you a question. How can you improve? And the guy really comes and gives this ridiculous answer, like, oh, rental income. The thing is, with rental income, it's a double-edged sword, is what I like to say. So it's good, but it's nothing tangible. If this would that solution would be good for someone that's starting with credit, for the first time, but I would never recommend it because then you're just giving more data to these people, which is not what you want. But then what's happening is then the lenders have access to how much rent you're paying, so it doesn't go based off stated on your credit application. Cough, cough, just gave you a tip and a secret right there with that one. But essentially, if you're trying to start credit, just get a secured credit card. Just put like $300 to $500 down, apply for a secured credit card, and start there from building your credit. Like you don't need to put your rent on there to like build credit. You don't even need to do that. If you even need an auto loan and you're in a financial position that you can even afford the payments, you can always go to a dealership. Won't be the best rate, but you can start off by just getting an auto loan through a dealership, and that would be better than reporting your rent to them and them having more of your information. Because what that is, what a what a rent, reporting your rent really does is it's a non-traditional type of loan. So essentially, is non-traditional type of loans can be like your phone bill, internet, utilities, rent. Like that stuff doesn't matter when it comes to your credit score. It's gonna help like a little bit, but it's not gonna make it's like if you put the rent on there, you're gonna get to an 800 credit score. I've never heard anybody say, you know what? I got to an 800 credit score with Vantage score because I reported my rent. Jackasses. Like, and no one's ever said that. It's just so ridiculous that that is what's happening here. But let's go ahead and get back to the video. Let's see what else type of advice this guy will go ahead and give us.
And how important is usage? How important is the utilization ratio you talked about before, which seems to be pretty good right now, showing the health of the consumer. But how can that impact your score?
Well, that's an important question. The reality is, if you are maxed out for a lender and for your credit score, that's a bad sign. So you should be using your credit responsibly. Use only the credit that you need, and don't use credit excessively. And that's particularly important in a rising interest rate environment where we are now, because
That's very hypocrite. How are you going to say use credit responsibly, but then say don't excessively use your credit? That's the most. It sounds like a hypocrite statement because the thing is like, because he's making it sound subjective. So it depends on the person. So let's say if you have a $5,000 line, but you want to use, but you have your certain lifestyle. Let's say if you do max it out, like this is what I get. This guy is a clown. He out here giving advice that is not tangible and specific. Instead of saying, well, use only what you need, but don't be excessive. That's very vague. Like I hate when with corporates like them, they have the secret sauce. Everyone knows it, and he's out here giving a BS response. We know when it comes to your credit or credit utilization, you do not want to use more than 30%, 10% for it to be very efficient, but you don't want to cross 30% of all your credit limits. So that means is so if you have three credit cards and they all have $3,000 on them, that's $9,000. That's a and you only use and you max out one, that means that you're at 30% because 30% of 9,000 is 3,000. So it's like uh, he could have said that, but instead he's giving this dumbass answer that gets people nowhere, and people tune into this because again they think that corporate's really gonna give their secrets. This I'm not gonna give him credit. F that. Let's get back to this.
that monthly payment for variable rate debt is going to be increasing even if you keep the total amount the same. And so credit utilization does have a significant impact.
So if you're trying to know your score, you also want to know what's the best number to get. So what is the best number? What score should you be trying to get?
Well, the perfect score is a Vantage score 850. You can't get better than that. But typically, banks don't need a perfect score to lend to you. If you look at Vantage score 660, that's considered the prime cutoff. Typically, consumers that have a Vantage score 660 or above are eligible for the best rates.
Pardon me? Are you dumb? I think she's dumb. I think she's dumb. I think she's dumb. Are you?
So that's really the sweet spot. That's where you want to get to, and that makes you eligible for the.
This mother. He really said 660 to get the best rates. You a whole damn lie. You lying to these people. Don't listen to that. We know that you don't get the best rate. Have you ever been going through the street and you see like advertisement for a loan from a bank or a credit union that says, oh, like the interest rate is 7.99 or 4.99? Normally the people that fall into those categories are going to be the people that have a credit score above 760, 770. It varies depending on banks and what they considered to be at the top of your credit score. So to fix his dumb ass answer, if you want to get the best rate, I would say shoot for 780. I remember at a bank that I worked with, they actually had it at 780, and you can get the best rate that they offer, pretty much the advertised rate that they advertise to anybody. So don't listen to this clown again. This guy's a freaking clown. I cannot believe he went here and said 660. 660 is like the bare minimum. Like you're gonna get like their worst rate. So if they so right now, so let's see if the lowest credit score interest rate is 7%, and then the highest is 18. Being at a 660, you're going to get more closer to 18%, or maybe at 18%, because again, that is the bottom of the barrel. Like you barely pass to get a loan with them, so they're going to give you the highest interest rate. So, man, this is ridiculous. I can't believe this. This is some wild shit. But let's get back into it.
Best interest rates in a rising interest rate environment.
So knowing your score and understanding what goes into it is going to be a very important thing for many people to do going into the end of the year and starting 2024. So thank you very much. Silvio Tavares, the President and CEO of VantageScore, joining us today.
Yo, I'm tagging him. I'm tagging him on this video. That was some bull. That was some bull. Wow. Jesus. Well, guys, we got to endure it. See that video. Again, the key takeaways of this video segment. Know what your Vantage score. You can always Google it, and just find out. If not, I'll put a link in the description down there, so you can at least have access to it. Um, that's the key takeaway. Your credit score, you want to get it to a 780 through Experian, at least, to get the best interest rates. I show you the algorithm so you know. So payment history is always king. So even if you're going through a financial hard time, as long as you make the minimum payment, you are fine. Like, because I know there's people that like to pay down their debt and they're throwing like $500 when the minimum payment is maybe $200. So if you just do the minimum, you're skating by. That's all you need to do until you're in a better position. And yeah, I was like, overall, this was a trash ass advice. Like, are you serious? But that's the world we live in. But let's get into the next video here.